Hello and welcome to Wham Vault. My name's Camilla and today I'm joined by Will, Cooper, Sam, Shaun and Will. Thanks for joining me, guys. Sam, are you worried about the impact of the weaker consumer on Temple & Webster?
Temple & Webster's a buy for us. It's an online furniture company that's run by one of the best management teams in the small cap market. Yes, a weaker consumer and a weaker housing market are worth monitoring. However, we see that their relative value offering, their dropship model, and also their prudent cost management will be able to see them sort of outperform and take share during this downturn. You only have to go back to 2018 when the last housing market downturn happened, and they actually saw an improvement in gross profit margins as a result of the product mix shift. Now, our thesis on Temple Webster's is simple. We just see that they've been able to comp the sort of high sales period during COVID lockdowns last year, and now we should be able to see sales growth returning to the business and a re-rating occurring over the period. So Temple Webster's a buy for us.
Will, are people still spending as much on their pets as they did in lockdown? And do you think CVS Group's a buy?
Yes, I think people are still going to spend on their pets. So CVS Group is a buy. They're a vet services provider in the UK. They're one of the largest there, consolidating the sector. The pet industry is an industry we continue to really like. There's increased humanisation of pets, and we've seen the pet population massively increase post the pandemic. If you look at survey data, most people would actually rather save on themselves than save on their pets, which is quite interesting. And I think that holds fairly true. And then if you look at the management team, they've done an excellent job. They've just had a capital markets day. They're talking about 4 to 8% organic growth and doubling EBITDA over the next 5 years. They've done an excellent job of attracting and retaining talent, which is pivotal in these businesses, services businesses, where people are incredibly important. So CVS Group is a buy.
Shaun, talk to us about Premier Investments. Buy, hold or sell?
Premier we've got as a hold at the moment, but almost a buy, pure on the basis that we do have some reservations or concerns around, I guess, the general consumer environment. But in Premier, you're backing the best retailers in the country in Solomon Lew and Richard Murray. It's really the strength of the balance sheet that positions the business well going from here. We think they're really well placed to make what we think will be a transformational third pillar acquisition. So yeah, for us, hold, but excited by the M&A prospects here.
Cooper, people are calling Hurricane Ian an opportunity in the US. Is there more to it? And talk to me about John's Lyng Group.
Yeah, Camilla, well, we never really like to celebrate catastrophic events. I agree with you. It's definitely an opportunity for John's Lyng's Group and their recently acquired reconstruction experts in the US. They're setting up their business in Florida, and this is a great opportunity for them to stamp their footprint over there. It's also no secret that cat events are also contributing to the revenue line for JLG in Australia. And we think the cat revenue is going to impress in FY23. Investment in the US is needed as JLG sets up existing companies like MateSafe in reconstruction experts, key areas across the US. However, we expect this investment to lead to revenue synergies in FY24. So JLG is a buy for us.
Sam, talk to us about Breville.
Breville's a hold for us. It's a great group of brands, but from our perspective, it's really one of those companies that benefited throughout COVID. There was a lot of people at home buying coffee machines and the like. So we're waiting for that to really normalise before getting a little bit more excited about the company as a hold.
Will, we're pretty upset that Netflix are putting ads in the middle of our shows. So are they a buy, hold or sell?
Yes, Netflix is a sell for us. Why? We think the industry is just becoming increasingly competitive. You've seen a lot of new entrants, whether it be HBO, Amazon Prime Video, ESPN, etc. It's just becoming a little bit of a crowded space, and it's increasingly harder to differentiate yourself. So there's further investment in content needed to keep staying ahead of the curve. We think the company is probably closer to maturity than what a lot of people think. That's evidenced with their ad-based business model, which they've recently introduced. It's quite telling when they previously say, don't expect us to introduce ad-based revenues because it means we're closer to penetration. So Netflix is a sell for us.
Shaun, if you read the media headlines, the airports are under a bit of pressure. Can Tourism Holdings benefit from this?
Absolutely. Get out there and get amongst it. Tourism Holdings a buy for us. They're the largest RV operator across Australia and New Zealand following the recent regulatory approval of the merger with Apollo. So we think both domestic and international tourism will remain very strong over the coming 12 to 18 months. You look at the combination of the softer Australian dollar and then also, I guess, just the ongoing shift we believe will occur from goods towards services. We think this business can generate over 80 million of profit after tax. They've recently upgraded the cost synergies, which provides, I guess, another level of support to that, and it's trading on a sub 10 times PE. The balance sheet's in great shape, great management team. We see expansion into North America as a medium-term opportunity for these guys. So yeah, we like that one. It's a buy for us.
Will, it's been a tough year for the biotech names. Aroa Biosurgery, buy, hold or sell?
Aroa's a buy. Aroa develop, manufacture, and then distribute medical products. Their product is, with the fear of oversimplifying it, just a really high quality Band-Aid, which you'd use, if you're in a bad motorcycle crash and you lost quite a bit of skin on your leg, you'd use their product. So it's quite an actually developed industry. However, they've kind of come up with a new type of organic product, and also next year there's a few regulation changes which really could benefit it. They recently posted some strong sales numbers and actually showed that there's some cash generation as well. So I think next year it's going to be a big year for them. So it's a buy.
Cooper, we all love a glass of wine. How about Australian vintage?
Yeah, Australian vintage is a hold for us. It's completed its pivot from a low margin bulk kind of wine producer to that higher margin pillar brand focused company. It's also taken a massive step into the home consumption arena, which is a fast growing segment for the company through its new brands, Rescued Spirits and Mr. Stubbs. Although it's seeing increased pressure from inflation and competitive nature in UK, which is one of its major markets, and this is tying up a bit of cash on the working capital sheet. So although we think it's extremely cheap at these levels, it's a hold for us through this period.
Will, back to you. What are your thoughts on the recent LGI Limited IPO?
Yeah, well, it's one of the several or handful of companies that have IPO'd, which is a non-mining company this year. It's really interesting. It's a gas abatement company. So essentially think where all your rubbish and landfill goes. They take the methane out of that area, and methane's 26 times worse for the environment than carbon dioxide. And then they turn that into energy, which is supplied back into the market. So they earn revenues from both the energy and then they earn revenues from carbon credits. They're doing some really interesting investments where they think they can probably increase profitability by putting a battery in the system. So that's where the capital is going. Really well managed, great chairman. So it's a buy.
Sam, PointsBet recently made a bit of a splash with Shaquille O'Neal and the marketing campaign. Are they a buy, hold or sell?
Yeah, PointsBet's a sell for us. We think there's a number of earnings headwinds over the next couple of years that will impact corporate bookmakers and subscale corporate bookmakers like PointsBet. And those are really increased taxes in Queensland and other states, and also increased competition from the likes of existing entrants, with Tabcorp upping their game, and also better, rapidly scaling into the market as well and gaining share there. So PointsBet's in a really tough spot. They're trying to manage towards profitability, but at the same time trying to stay relevant in Australia and also expand into the US, which has been falling behind expectations lately too. So it's a sell for us.
Will, there's a lot of volatility in bond markets. What are your thoughts on TradeWeb?
Yeah, TradeWeb is a hold for us. It's a great high quality business. It benefits from the increasing electronification of bond trading, which is a long-term secular growth opportunity. So the reason why it's hold is that we've seen credit spreads widen, we've seen interest rates go up, liquidity tighten, and that's left a lot of bond investors on the sidelines. So trading activity has been more muted and volumes have been slightly disappointing. At the same time, investors are positioning for shorter duration portfolios. So as rising rates go up, the take rate on shorter duration portfolios for TradeWeb is less. So these are some of the headwinds that TradeWeb is currently facing. We're looking for some of those trends to reverse before we get a little bit more constructive, because we do think it's a great opportunity, but it's a hold for us for now.
Shaun, Lovisa, buy, hold or sell?
Lovisa's a hold purely on valuation grounds for us. The business is shooting the lights out at the moment. We do think that the upcoming trading update at the AGM will highlight that the store rollout is tracking well ahead of expectations. But yeah, purely a hold now for valuation.
Cooper, what about Telix?
Yeah, as Will mentioned in LGI before, we're really liking these green angle technology companies, and Telix is a really exciting company. It's got a technology that's attracted Heidelberg Cements into an agreement. This technology reduces CO2 emissions in cement and lime manufacturing by 90%. Its other projects include a lithium salt project that's a JV with PLS, and it's also got a zero emission steel technology, Zesty. The Zesty project's just attracted a $1 million grant from the Australian government. We think these things show that Telix has some impressive technology, and the Australian government's ready to back these green projects. So it's a hold for us at the moment, but a really exciting company we're keeping an eye on.
Will, lithium's had a very hot year. What are your thoughts on global lithium?
Yeah, we like global lithium. I think I've previously said that we'd rather be exposed to the producers in this high price environment. However, we really like the assets that they've got. They've recently gone from 80% to 100%. MinRes is on the register and they're great capital allocators, so we like investing alongside them. And we think management's really strong. We're really excited to see the results they're going to have in the second half, well, the back half of this year into next year. They'll have a resource update and some drilling updates. So yeah, it's a buy.
Sam, the blockage in global supply chains has started to ease. How's this affecting Mainfreight?
Yeah, great question. Mainfreight for us is a hold. It's one of these extremely high quality businesses that we're attracted to, but has benefited somewhat from COVID. So we're trying to pick our entry point. In a nutshell, effectively, it's got this awesome workplace culture that really drives their success. They realized early on that the decision or the competition actually happens at a local level rather than the corporate head office level. And they decided to decentralize decision-making and decentralize accountability for that. So effectively, the branch owners feel like owner-operators in their own jurisdictions. Now, that's really been able to help them, I guess, roll out aggressively around the world whilst ensuring that there was no deterioration in the economics of the model. However, having said that, high freight rates have significantly impacted or improved the economics of the business in the short term, so we're waiting for that to normalise before getting a little bit more excited. It's a hold for us.
Will, US tech had a really tough reporting season. SAP, buy, hold or sell?
Yeah, SAP, they're based in Germany. We're still finding value in tech despite the US names stumbling a little bit in the last quarter. SAP is a really attractive business. Their key platform, their enterprise resource planning platform, touches something like 77% of the global transaction revenue. So they're very mission critical in all their customers' technology stack. So we think SAP is amidst a successful transition away from licensed revenue to recurring cloud-based revenue. And we think this is a great opportunity that's underappreciated by the market, given it's had a mixed track record of success previously under different management teams, but we think as a result, this gives you a great opportunity. As they transition to the cloud, they should be in a position to deliver double-digit operating profit growth next year. Their cloud backlog, which is a great leading indicator for revenues to come, is accelerating, which is really positive. The management team has realigned the organisation. They're delivering ahead of their mid-term ambitions, and they've actually just announced a new CFO who's come from Airbus, a great pedigree as well. SAP is a buy from us.
Shaun, the borders are open, but do the international students want to come back? And is iCollege a buy, hold or sell?
iCollege is a buy from us, and the students definitely want to come back. The recent quarterly update highlighted that enrolments are at records and they're now exceeding pre-COVID levels. So going forward, we think what the market's missing on this stock is really around the incremental operating leverage as capacity within their colleges is filled, which we think will drive earnings upgrades. Balance sheet's in good shape. We think they'll undertake acquisitions from here. So that's a strong buy from us, that one.
Cooper, what are your thoughts on Predictive Discovery?
Yeah, I couldn't leave without at least pitching one commodities company. PDI is a gold company based in West Africa, and it's stumbled upon one of the most significant discoveries in recent times over there. It's got a 4.2 million ounce resource of gold, and it's also continuing its drilling. It's hit gold intercepts 225 and 375 metres below its current optimised pit shell, meaning that this deposit could keep going down a lot further. We think it's really exciting. Love the management behind the team. It's got $50 million in the bank, and it's going to continue aggressively drilling while carrying out its scoping study activities. So PDI is a buy for us.
Will, we'll end with you. Telix Pharmaceutical Group, are they a buy, hold or sell?
Telix is a hold for the moment, but a buy to hold because it's interesting. They've posted two really good numbers, but they're up 50% in a month. So a month ago, they posted their Illuccix sales, and Illuccix has gone really well as their sort of first entry into the market. However, it's getting competitive. There's a sort of new competitor, so it'll be a third competitor coming into the market at the end of the year. So I'm just cautious around that, and that's sort of taking up a fair bit of their capital. They recently announced a new kidney imaging, some positive studies. They've got to go for FDA approval, and that looks really strong. So that's kind of why I'm probably more on the buy side, but just waiting to see what happens with Illuccix for now. So it's a hold.
That's all we've got time for. Thanks, everyone.